I'm not a financial planner. I'm not a financial advisor, but stick around because I'm going to give you a tip that I think is going to blow your mind. Welcome to Q&A Sunday. I'm Rich Dallas with the Dallas-Fincham team, Berkshire Hathaway, and I look forward to helping you save a little bit of money. Okay, everybody has heard this statement. If you pay one extra mortgage payment, that means I'm going to pay my mortgage off 7 years earlier. Or if I double down, I'm going to pay it off in 13 years earlier. Or whatever the number you've heard, that may have been true at one point, but not when the interest rates are 2.5%. Let me repeat that. When that statement came out, that was when in the 80s and the 90s, when interest rates were at, anywhere from 9 to 19%. And back then, it made a whole lot of sense to pay down that mortgage because it was most likely your most expensive bill at the time of interest, meaning the highest interest rate that you were paying. Now, if you have an interest rate of, I'm going to say anything less than 4%, which is an amazing rate, which everybody is probably refinanced at this point to have significantly less than a 4% interest rate. But if your interest rate is at that low of a rate, why wouldn't you pay off your car, pay off student loans, pay off anything else? And if your money's making money for you in the market or in other investments, wherever you have it, and it's making you more than 2.5%, why would you pay that off? Now, again, like I said at the very beginning of this, I am not a financial advisor. I am not a financial planner. However, I think that that's something that everybody needs to know because still to this day at a closing table, the closing company will often say, if you make one extra payment, you can knock 7 years off your mortgage. Well, I actually had a lender run the numbers for me, and at today's interest rate of 2.5%, it's only going to knock off about 1.5 years. So that's 18 months. So if your money is making you more money somewhere else, hang on to that low interest rate as long as you possibly can, because that is going to be something that you cannot get rid of. You're going to have that low interest rate forever, and you want to pay off everything else holding on to that. Now, if you just have all the money in the world and you have no interest and you don't care, you just pay everything off. That's the way to do it, to be debt-free completely. However, if you're like the rest of the world, or most of the world, I should say, and you have other loans, pay the higher interest rate ones off first. Again, not a financial advisor, not a financial planner, so don't take me to the bank on this. But I'm just giving you a tip because that's what we do on Q&A Sunday. Now, another thing we're going to talk about, just touch on a little bit today, is transfer tax. So this is unrelated to the first topic, but still related to the closing side of things. I get a lot of questions that ask, how can I reduce the transfer tax? How can I get rid of the transfer tax? Think of transfer tax in a real estate closing as your sales tax. Uncle Sam is going to get his money, and there is nothing we can do about it. In most areas here in the Pittsburgh market, it is 2%, 1% to the buyer, 1% to the seller. Now, the closer you get to the city, those numbers are different. In the city, it's actually 5%, so 2.5 and 2, So if, depending on where you're at, we'll let you know what your transfer tax is. Just know that it's at least going to be 1% of the sale price of your house. So if you're selling a $300,000 house, that's $3,000 that you're going to have in transfer tax. So pretty simple. Those are just two quick little things for Q&A Sunday. And today is saving you money. Just making sure if you are paying a ridiculously low interest rate, don't worry about paying that mortgage off, and don't make that extra payment if you don't want to, and don't stress over it just because somebody told you that it was a great idea, because that was your grandparents or your parents' idea back then, not today. So make sure you talk to a lender who knows what they're doing. If you want to talk to a financial planner, I have an awesome financial planner that I can put you in touch with. So anyone can help you out, but I just wanted to give you those quick little tips today. And so have a great Sunday. We'll talk to you soon. Take care.